Yo, what's going on, y'all? Hey, real quick, I just wanted to jump on here, give my input, my commentary on what's going on in the stock market, and I'm out. One, man, what I see right now is I'm a big picture thinker. I'm a broad thinking type of person. Like I zoom out to get a full comprehensive view of something and analyze it from that vantage point and then form my opinion on it. Like I'm not really into the details, the unimportant. I don't get lost in the small stuff. So what I see right now is going on in the stock market. Evidently, it looks like what they say, the market analysts, the experts, what they say is that we headed for a recession. I don't know how true that is, but the stock market has been down for the past few weeks. Even though it looked like it was on a rebound yesterday, that's all it was. It just looked like it was on a rebound. But the past few weeks, pretty much the start of this year, from year to date, the S&P 500, I believe, is down. I know the NASDAQ is down. That's been taking a hit. And the Dow, I don't really follow the Dow because it's not really that great of a gauge of the overall market. So and in addition to that, we have experienced a correction as far as the NASDAQ goes. And then today, I know we experienced a correction in the S&P 500. So for those of you who may not know, a correction is when a certain index dips 10%, experiences a 10% decline from its previous high. That's a correction. A bear market is when it's declined 20% from its previous high. And then, if I'm not mistaken, a full-on recession or a crash is when it experiences a 40% decline from its previous high. Right now, I ain't tripping about that stuff, man. I'm unmoved. I'm gonna keep doing my thing, keep buying, keep being consistent in buying. Every time I get paid, every time I come into some money, boom, I'm budgeting that, sending that to the portfolio, and going from there. What I see right now, man, is just a bunch of noise, a bunch of hype, I think some of it is manufactured, some of it is like generated hype, like to scare a lot of the get rich quick type of investors, which I don't consider a person to be an investor. They in it to get rich quick. Nothing comes good from chasing money. Nothing comes good from trying to build wealth quickly, from trying to circumvent the process. Everything takes time in this life, especially that which is good and helpful. It's going to take time. There's no way to bypass that. And so, with that being said, man, this is what I believe. To each his own. This is my opinion. I think a lot of the headlines, a lot of the talk, the analysis from the experts are, I wouldn't be surprised if a lot of it is just done on purpose to scare a lot of the traders, the get rich quick type of investors to get out of the way to sell off. So that way a lot of other people could come in and boom, buy stocks for the cheap. And this leads me to my next point. Although the market has experienced, well, the S&P and the NASDAQ have experienced corrections recently, I don't see it as a bad time. The market has been bloody. The market has definitely been on its cycles. That time of the month for the market, it's been red every day pretty much. But that's a good thing though. Perspective is life. If you see it from the right angle, you can maximize the moment. You can take advantage of this time. Why? Because from my perspective, the market is on a discount. It's like how Walmart used to do back in the day with the rollbacks. I don't think they call it rollbacks anymore. That's like, I'm only 32, but I think some of the jits will see me as an old head. But anyway, Walmart back in the day used to do rollbacks, and that's what the stock market is doing. These are just rollbacks. I want to say about a couple months ago, or maybe not even that far ago, for instance, Amazon's share price was at $232. Now, I just checked before I started this, before I jumped on this video, it was at $193. That's a nice little discount if you're trying to buy whole shares. Google, for instance, a couple months ago, it had hit 185. Now it's like 163. I checked. For people who like to invest in funds, ETFs, I'll give you one, QQQ, NASDAQ 100 ETF. The share price was like it was pushing the mid 500s. It was in that area. I'm not sure what the exact number was. I think it was like 550 plus. But now it's like 460 something dollars now. These are nice discounts. Now I hear people say buy the dip or you shouldn't buy the dip. This is why I think it's good to form your own opinion. Yes, it's good to kind of like watch some of the stock market news to stay abreast of what's going on out there. I wouldn't watch it. I don't watch it too much because it's easy for that fear to get in you. And that stuff is very like contagious. I don't like to live in a frenzy. I like to think very clearly. I like to have a quiet space to think, to analyze each and every thought I have, and then make my decisions from there. I like to form my own opinion, to be independent in thought. I think those make the best investors. But anyway, I think it's good to form your own opinion because you got some people who argue for the dip and who argue against buying the dip. I don't see the point in arguing against buying the dip if the share prices have come down significantly to a point where these stocks are affordable, especially for people who are on a tight budget but who still want to invest to experience financial freedom and build wealth. Bruh, I say buy the dip every single time. Just pace yourself. Like, don't get ahead of yourself because you never know you never know if the dip is going to keep dipping or if the dip is at its bottommost level and then it rises again. So that's where DCA comes in there, dollar cost averaging. So budgeting is necessary so that way you know what you're working with. You know how much you can invest and you know if you can invest more or not, especially in these times when the market is on a discount. Right now, the market is it's looking like it's on clearance. I'm telling you, the green days, it's easy to rejoice in the green days. You don't have to be taught how to rejoice and how to be happy when you are profiting, when you're seeing gains. What I'm seeing now with people who are investing and then pulling out due to these declines, which I'm excited. I'm staying in. I ain't worried about all that other stuff, man. They can have that. But the biggest setback I see with people, their number one enemy is their mindset. Their mindset. They're easily frenzied, they're easily panicked, and they make fear-based investment decisions when they see the market in these conditions. So, like I was saying a few minutes ago with not having to train yourself on how to be excited for profits. When the market is experiencing these red days, these declines, these losses, prior to that, you have to have been training yourself for these types of events, for these types of moments. Why? Because it can be emotionally unsettling, especially if you're new to it. Let's say you put in $100. Let's say you're trying to get, let's say a Walmart stock was like $70, but you put in $100. So you got like one share and then some. You got 1.5 shares. I don't know. We'll say that it's over one share. But then the very next day, you like, boom, you check it, you open your brokerage app, whichever one you use, boom, you lost $15. If you're not trained, what's going to happen? You're going to make a fear-based decision and pull your money out. Now you permanently locked in the loss. You'll never get that $15 back. Why? Because you pulled it out. So in these times, you have to train this. This is the number one enemy, man. I've seen it in myself when I first started, and I'm seeing it Because now I've been doing a lot of research, a lot of reading, just reading a lot of books from people who are billionaires who wrote in books on investing, and other people who may not be billionaires, but they've experienced a lot of wealth. They have a lot of experience and success in investing. And I'm just learning from them, people who've been down this road before, man. The Bible says, walk with the wise, you'll be wise. So during these times, in my research, what I'm seeing is that people's number one enemy is their own psychological condition. They've been trained to think, they haven't trained themselves on how to have like this staying power, to stay put, to stick with it. You got to have a long-term perspective to outlast these corrections and these declines and these bear markets, because they're not anything to run from. If anything, you should embrace this moment. You can buy more when the share prices plummet because it's cheaper now. It's like going in the store and seeing like your favorite shirt that was once priced at $60. Now they did markdowns. Now this shirt $15. Man, you would rejoice at that. You wouldn't run from that. Oh man, look at the sticker. It's red. I don't know about that. It got a minus. No, you saving money. You take that same logic and apply it to the stock market. This is the perfect time to go shopping. Right, you're gonna save a lot of money buying whole shares because they've been going down every day. So that's my little tidbit. Now I'll give you this final analogy. For me, I see investing is like planting a seed. Let's say you want an apple tree. You got this apple seed, right? I liken the apple seed to your investment amount, your initial investment. Let's say you got $50. You put the seed in the ground. You wouldn't go, let's say you put the seed in the ground and it's sunny today. And then you say, boom, okay, you come back, check tomorrow, it's raining. You wouldn't take the seed out the ground because it's raining, bro. You'll leave the seed in the ground. Why? Because you have an understanding that if I take this seed out, it is impossible for me to yield a tree. Why? Because I'm taking it out of its environment. It's supposed to be in the ground in order for it to bear roots, and then in order for it to spring up to turn into a tree. It's going to have to be exposed. It's going to have to go underground, get water, be exposed to sunlight, boom. And it's going to take time. That's the number one thing. It's going to take time. But we know that. You don't have to, because we know that, we won't have to constantly be coached on whether or not we should leave a seed in there. We don't even think about it. It's like subconscious. Okay, I put this seed in, expose it to some water, get some sunlight. In due season, it bears fruit. It becomes a tree that bears fruit that yields a lot more apples. Well, that same logic can be applied to investing. You take that initial $50 and put it in the stock market. The day you put it in the stock market, it's green, so you're excited. You come back the next day, it's red, you lost money. If you take it out, you will never grow that money. You got to have a long-term perspective. It's going to take time for that initial $50 to turn into $70, to turn into $80. But the same way you need to water the apple seed, you got to water that initial investment by bringing in more money, by keep adding money to it. And over time, in due time, you'll see that investment flourish. That's why you got to have a long-term perspective. You got to be a visionary, have a vision for why you should invest, for why you want to invest, Have a vision. And once that vision is clear and concise, document the vision in the form of a plan. Write it down, put it on paper, strategize, fine tune it as needed. You might have to tweak it every now and then, and invest according to a plan. Don't just invest to get rich. I think that's like very cheap living, like level one living. Have a plan, man. I want to invest to build wealth, me and my family, live life on my own terms, and be charitable. Who knows? But that's my commentary, man. I pray y'all get wealthy. I pray y'all prosper in every way. Y'all be easy. Peace.